closer to the mic because like the sensitivity.
This one?
Yeah, because it's like.
And surprisingly, we're at episode 26 today. Woohoo!
Woo.
Okay, guys, welcome to the Newbie Real Estate Investor Podcast, episode number 26. Woohoo!
Let's go.
Let's go. Let's go. I guess I'll start the intros today.
Take the lead.
Welcome everybody to episode 26 of the Newbie Real Estate Podcast. Today we're joined by Daniel Wang, who is our private money lender. And
Exciting.
yes, we're gonna have a great episode today.
Nothing like skipping the lender.
Yeah,
Going right
without
to
putting him out of
money.
business. I'm Vlada. We got Joe Fala here.
Joe Fowler, Joe does mortgages, and Daniel Wang. Congratulations and welcome to the podcast.
Yeah, we got like the two money people here and the one wholesaler.
We got a few of our co-hosts are out a little under the weather today, so just bear with us.
Yeah, we got triple play last week, and then like everyone's
That's
sick
what it was.
this week.
It was that weather off the ocean in Atlantic City. Did you go?
No, I didn't.
Oh,
No, only Mel and Jonathan were there, but Jonathan's kind of like in AC anyways.
okay. Yeah, he's always out there. He's the overseer of the project.
Yeah,
The project from hell.
they got actually on last week's episode they kind of talked about it. Like it's like what 9 units, and like basically everything that could go wrong went wrong. But like they're doing well with it. But like tenants are crazy.
It never goes perfect.
Never.
Always assume.
If it were that easy, everybody would be doing it.
Yeah.
I don't want everybody doing it.
So Daniel, you are a private money lender.
Correct.
Okay, awesome. That's how you told us in the back.
That's how you want to be introduced.
You want to be introduced. And don't worry, like I said, you've got the banking administration. FINRA's coming later.
Oh my God. It's okay. No problem. No problem. I'll show you the books.
Were you actually ever registered with FINRA?
I am actually. So.
Oh, okay, good.
Yeah.
I was joking around. I didn't realize you did.
Well, no, because like my registration's like long expired. Actually, not that long expired, but
As
I
a
was
what?
registered too. I actually did financial advising.
Oh, okay.
So I did have to do the fingerprints, all that stuff. But like what you did before, kind of like you would have ended up having to.
Right. So I mean, eventually you have to do it either way. But when you do it on the more private lending side, it's not as
Regulated.
Gotcha.
Not like Joe here.
Yeah, exactly. Every year.
Basically, everything you do has to
Every
get watched
year.
and stalked and like.
They have my fingerprints. They can draw like turkey handprints with all the fingerprints they have on mine.
Exactly.
So Daniel, how did you get started in the business? Tell us like a quick background and
Sure.
how that led up to where you are now.
So my background's actually so long story short, I was back in the day, graduated college back in 2008. Financial crisis, the fall 2008. It was crashing and burning. Fresh graduate out of college. You're like, what do I do, right? Do I go back to school, right? More schooling, or do I just, find a job, right? There's no jobs out there. I got connected with some friends, and we started doing a lot of like international business, right? So because when the market was down here, everywhere else was doing really well.
Okay, you say international real estate,
not real estate,
Amazon,
more like on the supply chain side.
Okay,
so we were mostly in the automotive industry. So anything with parts,
I was just telling my best friend.
Yeah,
he's looking to start a side hustle.
Okay,
and he's looking to maybe do a car wash, like a mobile detail. He loves detailing exotic cars.
Yeah,
and I saw a clip come up on Instagram about a guy that's making all these millions of dollars out in California,
right?
Doing OEM parts,
right.
Specific, like for like BMW or Mercedes, I think.
Correct.
Is that the same?
So that's one portion of the business. We got into like commercial vehicles. We anything used, we were actually exporting to other countries.
Okay.
So that was I got to travel a lot, right? So primarily I was traveling maybe 8 months out of the year, living off a suitcase. It sounds glamorous because you get to like visit a bunch of countries in Asia, South America, Europe. got really burnt out from that business because
it was your own business.
It was my own business. I had a partner.
Okay.
Right. So I got burnt out. I told my partner, I'm like, hey, dude, I can't do this anymore. I need to find something that I can stay home. Right.
Were you making money? Were you?
Yeah. Okay. Yeah. I was definitely making money. Just kind of a little bit of homesick, right? Kind of want to be back. So I kind of cashed out, told my partner, like, buy me out. I just don't want to do this anymore. Sat around for a while, sat around for like a year. I'm like, hey, what do you do? Like, what do most people do with, like, with a little bit of cash, right? It's like, hey, let's get into real estate, right? Buy a rental. And so I kind of started, jumping,
Who's we?
Well, no, just mostly me. Not
Oh,
me,
okay. You're talking to yourself.
Yeah, I'm talking to myself. It's just kind of like me talking about, like, hey, I'm sitting there. I'm like, what do I do, right? So, yeah, I mean, I clicked on, I went on Google. I'm like, I typed in real estate, landlord, tenant, whatever.
Google University.
Google University.
YouTube University.
Came across Bigger Pockets, like everybody, right?
Awesome. Shout out to Bigger Pockets.
Yeah, and then started, like, go through like their YouTube, and it's
a rabbit hole, right?
Yeah. I literally, that whole podcast of Bigger Pockets, like I went from like literally
started with Brandon, and then
David Green, the whole thing, right? So I went through, I think it's like 300 something episodes. I literally listened to everything on like 1.5 speed. I try to absorb as much as possible as fast as I can.
How long did it take you to get through all those episodes?
I don't know. It was like night and day, like 12 hours.
When is this, around what time?
That was around like 2015-ish.
Okay.
Yeah.
Okay.
Yeah. So I started like learning how to like underwrite, how to do burrs. I'm like, what is this burr stuff, right?
Oh, wow, that's wild. I wish I would have learned that stuff in
I know.
2015. I knew about wholesaling. That was it.
Right. So once I learned about the burrs, I started, implementing, right? I'm an action taker. I just go straight at it, start buying traditional 20% down. Eventually I get to a point where, like, you got to deal with the banks, right? And the lender's like, you're tapped out. You can't do anymore, right?
Conventional wise, it's
conventional wise before like what you do before you met another you.
Exactly. So that's all I knew, right? It's like, hey, go to the bank, get a loan,
right,
and then hit up fix it, and then put a renter, and then do a cash out refi, and then hit up somebody like you, get a DSCR loan,
right,
and then that's how you do your burr, right? So after so many of them, I kind of sitting there, I'm like, hey, how do I do more, right? The question is,
how do you pivot?
How do you pivot, right? And how do you get more properties, right? Because like whether you're new, right, like you're gonna run out of capital somehow, right? So I met this gentleman out in a meetup, and he was talking about like, hey, you can probably just use my funds, right, to kind of like get more and partner up with a hard money lender. I was like, what's a hard money lender?
So like you didn't know what hard money was at the time.
I heard about it, but I had some money on hand, so I didn't really need it, right?
Okay, so you didn't go down.
Right.
Okay.
Right. Because I'm like, I had the money. Why am I gonna pay him so much interest, right? There's no point. So I learned about hard money, right? I'm like, hey, I need to leverage hard money, right? And so that's how kind of I start flipping more properties to buy and hold.
Okay.
Yeah.
Were you primarily in a specific area?
Mostly in Jersey, Northeast, primarily blue states, because that's kind of what I knew. That was the market that I was, I live in Jersey, so that's kind of what I know. So that's kind of why.
Great, man. Anything in the Northeast?
Can't complain.
So you were literally doing burrs, like with money out of your own pocket without any hard money lender involved.
Right.
Wow.
Dude, it's crazy.
What price points were you at?
Yeah, right?
Mostly like the smaller stuff, like anything's like sub 500s I could do.
Like Newark and Irvington?
No.
Well, at the
like,
time.
more like suburbs, right? Like more like, like stuff in Bergen, like Monmouth County, like stuff like that.
Those are great areas.
Yeah. So I mean, nothing too expensive, because there's no point buying expensive properties, right? Because you won't cash flow.
Right. Okay. So then that led to finding a hard money lender,
right?
And then like really scaling it then with the DPs.
I learned how to leverage hard money lenders, and that's kind of like when it took off, right? And so when it took off, I started doing on a more advanced level, I guess, doing more properties at the same time. And then eventually also I start tapping out on the down payment for the hard money lenders, right? Like, how do I scale? Like, and then you start learning about private money lenders.
Okay.
Right. And so private money lenders come in. For example, when you work with a hard money lender, if you're brand new, it's usually what?
25% down.
What?
Yeah, or
That's
30.
like 10. Really?
25 to 30.
Minimum 25, yeah.
Okay, so
Once
basically,
they get to, after like the third or fourth deal, you can probably get down to 10%.
okay, so everybody just like partner with people because like you can borrow their rates.
Right.
So, like,
Yeah,
I
exactly.
don't even know about that because like anytime I write something up, it's like I assume I'm partnering with someone.
I wish that there were podcasts like this where they taught you how to like do private money and like bring in hard money to kind of like blend it together and work together.
Just come up with
them.
ideas.
Right.
Just come, yeah.
Right.
Be creative.
Right.
Like the niche term now.
Right. So I'm like now I'm very into creative methods, creative, financing, all that kind of stuff. Right. So
Okay.
yeah.
So how did you get from like DSCR obviously at a hard money into creative? Because that's like a huge jump. Like I know a lot of people who do these things, they don't even know, let alone like you're a huge member of the Gator community.
Was DSCR available?
Yeah,
were people talking to you about it? I mean,
well, I learned about it from Dealer Pockets, right? The podcast. Right?
Okay.
So that's kind of how I knew about cash out refi. I'm like, I thought that you can put 20% down and just, rehab it, and all of a sudden now your cash is stuck. Now you can't do any more deals.
Right. Well,
Right?
that's the last R.
Right. Right. So and then I learned the world with DSCR lenders. I'm like, holy crap! Like I can do a lot of deals.
Right. Exactly.
So, and then as long as you can get your principal back out. Right, that's kind of like the game, right? Get your principal back out and get to the next deal.
Yeah,
Correct.
and just have a cash flowing asset.
Exactly.
Are you still holding any of these properties?
I am. So I did them up to like 27 properties. And then when I found out about creative financing, that's a whole different story. Well, anyways, long story short, I sold them, at the peak of the market, like 21, 22.
All of them.
No, I kept 7. I sold a good amount of them. And then I jumped straight into creative buying deals creatively.
Okay.
Yeah.
So you've mentioned creative deals a few times.
Yes.
So I come to you. How can you help me? I have some money on hand, right? Because obviously we teach. You don't. Nothing is free, right? There's no all this. It's a myth that you can just go out and get stuff for free. You can, but it's like a 1 in a million chance that you're going to be able to find a deal without putting any money down.
Right.
You got to pay money for cold calling. You got to pay money for signing. You have to pay money for VAs. You got to pay money for skip tracing. It's not free.
Right.
It's not free.
Right.
You need some skin in the game.
Always. I mean, it's also like who you're working with, right? Like what kind of resources. I always say if you're brand new, I suggest partnering up with somebody who has experience.
Yep.
Right.
Always GV.
Whether
first
it's
couple deals.
Yeah. Whether it's you're getting your first deal as a wholesaler, right? You don't know what you're doing. Bring in somebody experienced like Vlada, right? She'll walk you through it.
Mm-hmm.
Whether it's cash or, the way I work with a lot of wholesalers, if you're brand new, a lot of times you're going to come across these like, deals that they don't make sense as a cash deal.
Okay.
And so like I tell those wholesalers like, hey, call me and like let's see if we can find a creative solution and get your deals closed.
So do you have an example maybe how you maybe assisted a wholesaler in the past?
Okay, so I'll give you an example. Right, recently, a lot of times is people that bought properties 2020, 21, right? They jumped, they bought the property. They're sitting on no equity. If they're in maybe arrears, they can't afford the house. Something happened to their family, whether they're splitting up.
Are you seeing these cases already?
Yeah.
I'll tell a lot.
My Louisiana deal is the prime example of this.
I'm trying to close the deal with Vlada right now. We're trying to figure that out, right?
Yeah, like the seller has like what $7,000 in arrears, something 7.5,
Well,
and
maybe
she
a little
just
more.
bought it.
Maybe a little more after the first.
No, it's already like.
Oh, it is. Okay.
It's this week, so I'm counting as like 7.5.
So it's gotten worse.
Right. So arrears. They call the agent. They can't put it on the market because they have to come out of pocket, right? At the closing table, they have to pay commissions.
They can't do the standard way of just listing it. Not work.
Like they can, but the issue with doing that is it's the sake of time, right? So it's like if you listed, it's gonna take sometimes a hell of a lot longer to close it. But if you're already in arrears and like you're in a red state, you're gonna get foreclosed on like
Quickly.
You're gonna get foreclosed on a hell of a lot quicker than here in Jersey.
Yeah, exactly.
So like you don't really want to do that sometimes. And
Gotcha.
also like in her case, like what is she gonna do, right? Like her credit's kind of already tanked. And by the way, it was a she, so I don't know who the hell was walking your person.
No, there was some dude talking about like they're gonna take your souls in my video that walked through. I'm like, hey, you know what? Don't ask questions.
But yeah, like I mean, sometimes sellers can. In her case, like she does have a lot of equity, but like in this case, she does have equity. A lot of sellers don't. Like you'd be surprised how many sellers like. We were talking to people in Connecticut, and like they had like 14 grand of arrears and no equity from an FHA loan. And they bought it less than a year ago. And now they're getting divorced.
Equity, yeah.
But 14 grand to catch up to
and
someone.
There's no equity because they overpaid for the house. That's most likely the case.
Not even. It's because it's a 3.5% FHA loan. So even like realtor commissions up there, it's like a $250K house. It's 6%. Like you're upside down. Exactly. And you have arrears. So like, you're more upside down. But 14 grand.
Double screwed, unfortunately.
Yeah, for an investor, it's not bad when your property's 12 minutes from Yale University. Like, and it's a brand new shiny house. Like that's great. Absolutely. But sorry, go ahead.
No, I mean, where are we at?
So a wholesaler came in. You were helping a wholesaler recently with a deal,
right?
With some creative finance,
right? So I mean, he was offering cash deal. Obviously he owed a balance on the mortgage, right? So obviously, if you're a wholesaler, you offer them 50 cents on the dollar, right? Based on ARV, they're gonna say no all day because they're still gonna owe the mortgage company, right? And so we come in and be like, hey, a wholesaler, like this is how you structure it, right? Like whatever mortgage they have existing, they'll stay in their name, right? Me as the deed would transfer to me as the new buyer. I just make the existing payments on the mortgage. Gotcha. He gets to walk away scot-free, no foreclosures, no bankruptcy.
What's the technical term of this?
They call it what? Subject to. Okay. Everybody wants to jump on creative finance subject to now, but it's a little more intricate than just doing that. It's a lot of paperwork.
Okay.
Yeah.
So the way the deal worked for you with a subject to is it was cash flowing. You're renting it out, right? You're not living there.
Well, in this case, is like I help them put it under contract, and then we're gonna sign the deal to an investor.
Okay. Yeah. Get a little bit deeper for me.
So in this situation is there was arrears of, like, for example, let's say the property they're sitting on $10,000 in arrears, right, on the mortgage. Okay. Right. They have no equity. They had an agent listed, right, at the same time, and they can't afford the closing cost, realtor commissions. Right. All that stuff, right? And so what I did was like I told them, like, hey, I'll just take it over subject to, right? Okay. So transfer the deed. Me as a new buyer, I take over. I do the payments, and then what you do is I put some money in the seller's pocket. Like we give them $5,000, right? Agent commissions were about maybe like let's say $10,000, right? For example. So and plus we have to do closing costs. So let's just say that we're in the deal $20,000, right? I'm just using simple math, right? Okay. Because a lot of newbies here.
Yeah, you saw my eyes light up.
Yeah. so
I'm still thinking. I got the rears written down on the side.
Right. So let's just say that we can buy a house technically for $20,000, right? Okay. And so what we do is we take this the down payment that we're going to give for the transaction. We put on an assignment fee of like let's say $10,000, and we'll sell the deal to you as an investor for $30,000. Okay.
And this is all the while, like, you're using the seller's existing interest rate, and like right now they're an all-time high. So realistically, you're getting a house at a better interest rate than you would today, as well as an investor.
Who's covering the rears? It's in that 30.
Correct.
Yeah. Or is it separate from the 30?
So the down payment,
because you have a spread in that 30, obviously. Exactly. Right? That's your commission. We'll call it a commission.
Correct. So it'll be some money to the seller, some money to the closing costs. It'll be the agent commissions, and then if you're dealing with the wholesalers, that you're going to pay the wholesaler assignment fee in there.
Gotcha. It's all in that 30.
Exactly.
And again, I'm being very specific about the rears, right? The rears is in there as well.
It has to get paid off, otherwise you can't clear title.
Gotcha.
Exactly.
Okay.
Yeah. Unless you like quick claim, but you're not going to do that.
That's more of a family member to family member.
Correct.
Okay.
That's like if you want to take any risk in the world, basically. Right. Like you don't know what's going to happen. You don't want to quick claim. No.
Right. I want to make sure it's all clear.
Yeah.
Okay, so you came up with some cash to help in that deal, or that was more of just being creative and coming up with the paperwork?
That's just me helping out a fellow wholesaler that already works with me, right? That, hey, because I know all these different kind of creative methods of how to close a deal, I helped them structure it, right?
Okay.
So like I work with a lot of wholesalers in this way. Okay. Yeah. And at the same time, it's whenever I work with a wholesaler, it's like depending on your level of, how much deals you're doing, whether it's you're brand new or you're doing like 10, 15 deals a week or a month. Okay. They're a private money lender for double closings.
Okay. So explain that.
So how double closings works is if you're a wholesaler.
Get your pens and papers. This is
guys, get your pens and papers.
So
this is who you're gonna call. Like
exactly.
Like this is important. Like a lot of states might not let you just assign, or like there's situations where you might not want to do this. So like take notes, please.
So what I usually do is with wholesalers is so when you put a contract under contract with a seller, right?
A wholesale contract.
A wholesale contract with a seller.
Be specific.
Correct. that's called the A-B contract, right? So the A-B contracts between A would be the seller, B will be the wholesaler, right? And so you put on the contract, let's say a house for $100,000, right?
Rears or no rears on this one?
It doesn't
They
matter.
just say it's cash deal.
Yeah, it's a cash deal. It
They're
doesn't
just
matter.
trying to sell the house, and you happen to.
Yeah,
the
so
wholesaler found them.
Daniel is the seller. I'm the wholesaler.
Right.
I'm your friendly neighborhood wholesaler. So
So I hold the A contract. She holds the B contract, right?
you're the A, I'm the B, and we hold the A to B contract.
I thought you were the wholesaler.
Yeah, no.
Okay.
You're the A, I'm the B. I'm the B wholesaler.
Okay.
I'm
Right.
like the bitchy wholesaler.
So there's an AB contract, right, between the wholesaler and the seller, right? And then now you as a wholesaler, right? What's your main goal? You're not keeping the property. You're gonna sell the deal to an investor.
To
So
you.
we're gonna sell to him.
Okay.
Right. So when I sell the deal, I have a contract with him, right? It will be a B to C contract. Does that make
The
sense?
seller.
No, the wholesaler.
The wholesaler.
So if I'm the wholesaler,
Oh, you said
so
she's B. She's B.
So I sell it to her.
Right.
for
Right.
$100,000, and then I'm gonna sell it to you at 110. So the title company gets two contracts. One that says Vlada is buying Daniel's property at 123 Main Street for $100,000,
Right.
and then I'm gonna say Joe is buying the contract from Vlada at 110.
Gotcha.
So then it's like, the title company is gonna send me the check. You're getting your $100,000. You're paying your 110.
Okay.
Does that make sense?
Yeah. No. Absolutely.
Yeah. So I mean,
Just for transparency, I know how this works.
right.
No,
We
you know
want
what?
to make
You
sure
got
that everybody understands.
We
If
actually
you
have
come
very
up-
little wholesale people on this show.
Oh, really?
No,
Okay.
this is great. But
This is actually helpful for them.
I remember sitting in my car watching these wholesale videos and stuff like that, and some of the wording they use sometimes it goes over your head. Like,
Yeah.
what does that mean? And what stops so many people? I say it a lot. It's the black curtain effect, right?
Right.
What's behind the curtain? Like, what's behind what he just said? Who can I ask? That's why I'm asking just like
Right,
the more
right.
tedious questions.
Actually, that's true. Like, so I wholesale, and I remember even when I did my first deal, even like my second deal, I was like so scared. I was like, oh my God, what if the seller's gonna freak out seeing my assignment? Like, all these things. Like, I mean, if it's like a 10K assignment, they're probably not gonna care. But then if you have like a 60, 100K assignment, this is
Pump
when
the
you might
brakes.
want to start talking to him,
Pump the
because
brakes.
this is when you're gonna start having issues. And it's like, that's when you do a slightly different way of structuring your paperwork, or like certain states, like
Right.
Illinois.
I mean, ultimately, what double closing is, you are the actual buyer for that house from the seller, right? That's what that means, right? And so once you buy the house under your own name, 2 minutes later, I sell it to Joe, right? Like instantaneously. That's why it's called double close, because we close the same time, right?
Yeah.
So what I usually tell the wholesalers is like, hey, if you're making like a fat assignment fee, right? Like, don't get to the closing table and
Have the seller see it and freak out.
because
like,
the seller's gonna see like, hey, you're making $50,000 assignment, right? And the seller's be like, hey, I only got $5,000 out of this deal at closing.
yeah, they're gonna
And
be
you're
like,
getting
what the
50?
hell?
Like, screw this. Like, I'm not signing.
Well, my take on that is, I go out quite a few times, right?
Yeah.
I go out, I like nice restaurants,
Right.
and I still haven't heard anyone say, "Show me the receipt for this steak. How much did you pay for it?" And between your cooking and paying the chef and the waiter bringing, where's the difference?
Well,
What's the spread here?
The thing is, like,
No one else asks that except for in real estate, unfortunately.
yeah, I think it's like because they're given the HUD, right? And they're seeing things like in the thousands, like in the 4 or 5 digit numbers, like the lower digits, like for whatever it would be. And then like you just like don't want to take that chance, right? Like, because like I think everyone here knows like your transaction can blow up like 40 minutes before closing.
I mean, I seen 15 minutes before it was supposed to be signed. They
Didn't
saw the
you walk out?
documents.
On something
Well,
like
I did, because last minute on the HUD, there was something wrong with the HUD and the paperwork, and there was something I discovered on the HOA which was bad. I'm like, I'm not doing this deal.
But see, like, this happens last minute, and like the seller might not have reviewed the HUD up until they go to sign it, and like you just don't want your deals blowing up.
And this is also why you want to JV with someone, like you said before,
Right.
specifically on like real tricky deals.
Right. I mean,
Or
the
get a second set of eyes on it at least. If you think
Always.
you can do it on your own.
I
Hey,
mean,
you want the whole 50K? At least, take this guy out to a steak dinner or something. I'm not sure if you're a meat eater or not, but
I don't know.
just to get a
steak
second set
all
of
day, no
eyes on it.
problem.
Just
Yeah.
to get a second set of eyes on it.
But yeah, because like that, if you do a double closing, so Daniel's the seller, I'm the buyer, what ends up happening is he sees the HUD statement between him and me. He doesn't see like, so let's say like now I'm buying his property for $100,000 and I'm selling it to you at $200,000.
Right.
he doesn't see that I'm selling it to you at 200 grand. He doesn't see that difference. He only sees that I'm buying it at 100. That's the only thing that he sees, including whatever like my loan origination, whatever it would be with you. Like he doesn't see that. And then the title, because now this is the contract A to B, and then like I'm acting as a seller, not a wholesaler, on that B2C to you at that 200, and then I collect the difference from the title company.
So I remember this is one of the first things when I was first learning about wholesaling. How have you had the buyer, the end buyer, the C buyer, question the spread?
Yeah, it happens. Yeah. I mean, I'll ask you. The thing is, if you're an M buyer and you knew that the wholesaler is making such a large amount, like you're not gonna feel good about it. Be like, hey, I didn't negotiate him down. I could have got a better price, right? And then if you're the wholesaler, you're also jeopardizing the relationship between you and the M buyer. It'd be like, because the M buyer is gonna feel like they got ripped off,
right?
Be like, hey, I gave you a discount of $5,000, but he made $100,000 on an assignment, right? It's like not good.
Right.
Yeah.
Well, it's the same. Again, I'll use. You go to places and they're selling you a bottle of water that you can get down the block for $1.50, but the convenience that's what you're buying. Right now you're at MSG and that bottle of water is now $7,
$20 probably.
I mean, some buyers, they have
it's
blatantly
about the convenience at the end of the day. If you were knowledgeable enough to find a deal on your own, then you wouldn't have to have paid this commission.
Exactly.
Well, here's the thing. Like I've had my buyers tell me, like, I don't care if you're making $100,000 on an assignment, like so long as my numbers still work, right? But like, what if I'm making $100,000 and you're only gonna make 30? Some buyers are gonna be like, the fuck?
Yeah, but I'm also gonna get appreciation on this property.
Well, if you're flipping it, you're not.
Right, but I'm just saying,
there's
I'm getting
things.
appreciation. I'm getting increased rent, right? I can do forced appreciation, fix up the house a little bit, maybe add an extra bathroom, and now I can charge another $800, $500 for rent.
Right.
With that, the wholesaler's not gonna. The wholesaler's like, hey man, you told me you were gonna rent that thing out for $1,500. Now you're renting it out for $22. Right. The wholesaler can't come say, I think you owe me a little bit more.
I've seen buyers do like wacky ass. Like I've seen buyers walk away with money at closing from deals I've wholesaled to them, and I knew they were gonna do it, and they were making more than me, and like I'm like, I don't give a shit. Just like give me what I want. Like, but like I don't care. I'd rather have a good relationship with them because I know what they're doing. So now I'm like, if I ever see a deal like this, like again where you have more equity and you can just like pull it out, great. But like, yeah. So how do you come into that double close scenario?
So what I do is
not as the seller,
right? So let's say that Vlada's the wholesaler, right, in this deal, and she's buying the house, right? So she holds the B contract. So once we go on the contract, Vlada's like, hey, I have this house that I'm buying for $100K from the seller. So me as the private money lender, I come in and be like, hey, Vlada, here's $100K, not literally to her, but
no, to the title company.
Title company, right? And
Imagine.
So I tell the title company like, hey, I'm Vlada's capital partner.
So hold on. Let me bring this back for a second, right? This is interesting, right? So Vlada doesn't have $100,000 to buy the house.
No.
Okay, right? You want to be specific about
best case scenario, and Daniel could talk about this too, but like I would have earnest money, and if I don't have earnest money, I still talk to him.
At least some sort. You're not just gonna get any person off the street that say, "Hey, I found this deal."
No,
Lend me $100,000.
No.
And they took the bus here to the closing.
Yeah. So tell us what you would need from me as a wholesaler to lend on something like this.
So when we touch base on like wholesalers, right? How do you get like a second set of eyes or somebody experienced, right? And so how I usually work with these wholesalers, like I tell them, hey, bring me a deal that you think that you potentially are closing, right? Send me the address, send me, all the stuff. I'll take a look at it, I'll underwrite it for you, right? As a second set of eyes. And then if it's not a good deal, I'll tell you why, right?
Okay.
If it's a good deal, it's like, okay, let's move forward, right? I'll fund your deal, no problem.
Gotcha.
Yeah.
So now I'm coming to you. I'm saying I'm buying a property $100,000 and I got someone I want to sell it to at $200,000. Because I do have to tell you this.
Right.
You are going to see both contracts.
Exactly.
So like
as the private money lender.
Yeah.
Yes.
So tell me what a wholesaler would need
cash
from you.
deal, right? Without using
Yes.
a bank,
Cash
anything
deal.
like that.
100% cash.
Yep.
Okay.
So tell me what you would need from me as a wholesaler, like on the private money side.
So I basically want to see the purchase and sale agreement, right? How much you locked up the contract for, right? How long, right? When is the close of escrow? Basically all the details, right? And what I do is I call the title company. I tell them, hey, title company, I'm Vlada's capital partner. I'm a private money, I don't tell them private money lender. I'm just like, hey, I'm Vlada's partner. I am funding the deal. We're going to fund the $100,000 for purchase of that property, right? And then we're going to double close, right? And they're going to ask us, hey, do you have an M buyer in place for the BC contract, right? And so let's just say for this instance, like, yes, the buyer's lined up, we're ready to go, we're ready to close.
Have you vetted her buyer at this point?
No, I don't.
Are you holding it her?
No, so the only thing he really needs is to know that your earnest money and stuff is in.
Right.
Okay.
Because now the contract's already there. Like, if I tell
you're
you,
vetting the earnest money at least.
Right. So I mean, if the end buyer is serious, he's gonna drop, you know, at least $5,000, right? Non-refundable deposit.
Depending on the price of the property.
Correct.
Yeah.
Yeah. But it's always non-refundable from the end buyer side, because I want to make sure that, hey, you want to buy the
you
property.
Want to make sure she stipulated that in her contract.
Yeah,
Yes.
and it's so he's gonna see whatever contracts I send you to make sure that his money is safe.
Okay.
So
you're basically like an underwriter at this point. Now you switch roles, kind of a
yeah.
Okay, a private money underwriter.
Correct. Yeah, so that's kind of like the good, and I guess it's always good, right? I mean, you get to practice a lot of deals, you get to watch.
Again, this is good. This is like kind of like the JVing where you've got partners that are experienced, right? Not selling books, not selling courses on YouTube. Do you have a YouTube channel?
I don't know.
You're gonna be actually... if he teaches a course.
No, I'm not, right? Exactly. No. I'm not selling books. I don't do any of that kind of stuff. This is what we like to say here are gurus, not gurus. Right. So he's actually out in the field doing this kind of work.
Right.
Okay. So you come up, you're on the phone with the title company, you're telling you're going to be you're going to be the private money.
I'm the capital partner.
Capital partner. Okay. Yeah.
And so that I'm going to fund the deals that Vlada just put on the contract, right? The AB contract, which is $100,000, right?
Okay.
Now I'm going to ask the wholesaler, like, hey, do you have the M buyer in place? She's going to say yes, right? It's ready to go. He already sent in the earnest money deposit of $5,000,
which you're going to verify.
Yep, I verify everything.
Okay.
Right, and I ask him, hey, when is close of escrow? Right. So and then the title company will schedule close of escrow. The end buyer will either come out cash or hard money lender, whatever it is.
Okay.
That's not my, I don't.
It doesn't matter so long as the money gets paid for the contract.
Gotcha. Right. So I know that it's ready to close, right? So let's say day of closing, the end buyer is ready to close, right? So they're funding whoever, either their private money lender or their hard money lender.
Do you verify any of that stuff, either of you?
Well, at the day of closing,
that was an honest question.
Right. No, at the date of closing, right? Like the way how I do it is I wait for the end buyer's funding to get wired into the title company, right? I call the title company, I verify, and then once everything's clear, I'm the final leg of that deal. So I come in and I fund $100,000.
Okay.
And so from there, the title company takes my money, closes AB, and then they'll take the money from BC and close that deal at the same time. And then after that, Vlada gets her assignment fee. I get my part of the deal, however we work.
That you and Vlada have worked.
Correct.
So there's got to be enough equity in this deal, right?
Exactly.
Yeah, because then
this
at that
point,
this is
not just some random wholesale deal that you can do this with.
Yeah, so double closes are a little bit rare because it's a double close. It's not like Joe as the end buyer is very rarely going to pay both sets of double closes, like both sets of closing costs. He's going to pay his and I have to pay mine. And on top of which I have to pay Daniel.
Okay.
So you do have to have a little bit of a spread. So if like closing costs before like whatever he's funding me is like 10 grand, I better account for that 10 grand.
Okay.
But a lot of times it comes out better if you did a very good job negotiating. Like you're better off paying that 10 grand.
They're not making any money.
Yeah. Like if you have like 60 grand coming in, like, and the seller sees that 60 grand, they're going to tell you to fuck off and they're going to blow the deal up. You can't force the seller to sign at the closing table. Like this has happened to me. Yeah. Like
because they see it at the end of the day.
They get mad. They're like, hey, they're in a bad situation and they're not even making money by selling their house. Now they see you making a ton of money. They get sour.
Yeah. So like, don't be greedy. Like
I can't remember. It might have been someone on Pick Pockets. It was this years ago that said, what you want to do as a wholesaler, right, with your end buyer is have a conversation with them and say, do you not mine, but does it matter to you if I make $1 or I make $100,000 on this deal? And if they say it does, then walk away.
Right.
Because it's just going to end up being a problem. This is just the
but sellers are always liars, right? The
right.
What can happen?
Yeah,
no, the buyer. I'm talking about the buyer, the end buyer, the C buyer.
Oh, like you.
Because of the spread that she's, right? Her commission that she's making, right?
Well, if you buy traditionally, like assigning the contract to you, you'll see everything, right, that she's making.
No, but I'm saying more or less, there are instances where the buyer is going to say, oh man, I could have negotiated, like we said before, I could have negotiated this better.
Right.
So what that person said, hey, you make it clear. Listen, if I make $1 or if I make $100,000 on this deal, doesn't matter to you, as long as you know I have all of our best interests in this deal, right?
Right.
And if they say yes, you walk. If say no, you keep working with them.
I don't know how true this is. I've had some buyers say like they're like hard money or they're like DSCR lenders are not cool with higher assignment fees. So they're like.
So that can kind of like throw the deal.
But I don't know how accurate that is. Like I've never worked with someone that was the case on, but I've never had like assignment fees that high that they would care.
Gotcha.
I don't
as
think.
long as it pencils out during underwriting for a hard money lender, they'll just they'll do the deal for you. They'll fund it. Yeah.
It's under your foot.
Yeah.
Okay.
But like the whole main point is for this is like, in order to save their relationship at the closing table and by, the seller and the buyer, the end buyer, right? The investor, not getting pissed off at you, just double close, right? Like, don't take that risk. Don't take that chance. I had wholesalers hit me up like, hey, my deal fell apart like at the closing table because I was trying to save like a few grand.
Right.
Don't do it.
Yeah.
Missing dollars trying to pick up pennies.
I once had a deal fall through. So this is one of those times I didn't care that the end buyer was like making money at close. So this was like a little bit of a weird deal, not to really go over anyone's head, but like my assignment was like 8 or 10 grand. It wasn't even a lot. Like honestly, it was a really low price property. The purchase price was actually 100 grand. So like I think I sold it at 108. This one was specifically a weird case because the buyer had like a flip entity and like a buy and hold entity, and they sold it to themselves. They double closed on themselves. Like I assigned it to their flip entity and they double closed on themselves as like their rental entity at 175. In a way they would get like 40 grand back at close because they're pulling out the equity because like they're taking like whatever and then they're getting like their down payment back. But it doesn't really matter. I'm not going to go into this, but basically
this is the whole
they did this.
The rich get richer.
Basically. I mean, I've had this happen like on deals before and I didn't care because it went smoothly because they're double closing. So like I didn't even see that contract and somehow the seller got a hold of that double close contract. I don't know how. It was like a separate A to B and then like total different B to C. Like no one should have seen it and we don't know how. And she saw they were buying it at 175 and she started spam calling for 3 days straight the end buyer. And like
how did she get a hold of him?
We don't know. Because like if anything,
she's
she would have.
A wholesaler.
No, so she's not even in real estate. So the crazy thing is, if she would have seen any contract, she would have only seen that 100 to 108. We don't know how she saw the 175. And actually, the buyer finally picked up, and he's like, "Mind you, this house actually ended up appraising at like 155 or something." Wow. So he, like, because the market started tanking there a little bit, so we don't even know how. So they actually did have to bring more money out of pocket than they intended to. But it was like, what in the world? Yeah, is going on? Like their plan didn't work on this one. This has worked successfully on other stuff, but it didn't work. And somehow she saw it and like that deal blew up because now it's like she's getting like nothing and then seeing the 75. So as much as like, but this was like some mistake on the title company's end. Like usually if you double close, like this doesn't happen.
Yeah. I mean, they probably just sent the paperwork to her by accident.
They probably did. But like, see, like this was a by accident situation when a double close was supposed to have happened. But like, imagine like this actually happens on your deals. This is why you guys want to talk to Daniel and make sure this does not happen. You're gonna have a very, very, very angry person who's just gonna blow it up.
Because I had a lady call me yesterday. She's trying to buy a property in Philly, and she just bought a property in Miami. She said by mistake. I said, how do you buy a
property?
She got outbidded, and she gets a random call. Are you still interested in XYZ property? She's like, yeah. She goes, someone made a mistake and you're on the contract.
Oh, wow.
And when the buyer and they were all at the closing, they were all at the escrow that set the settlement date.
Right.
And the buyer, whoever figured out, like, wait a minute, this isn't your name. And the buyer got so upset they walked away. And my client actually ended up getting the deal, and she said she got like a $10,000 credit on top of that.
Holy crap!
That's freaking awesome, but that's hilarious.
That's insane. That's amazing.
It was an investment property.
Wow,
it's amazing, right? I was like, "Well, this is a story for tomorrow." I didn't realize we were going to pod today. I forgot.
Never assumed that the title company does it correctly.
They know exactly. They're humans, right?
Yeah.
So AI starts taking over, but they're humans.
Exactly.
Yeah, like it seemed like that one specifically was just like a mistake of title, and like that's partially why, like, please go through a title company, get title insurance, don't cheap out on that.
Yeah.
I'm not even like a title person,
It's
like, but
literally a
like,
few bucks. It's not very expensive.
Exactly.
it's 100% worth it. I've seen things like a fake seller sold it, and like they had like real documentation, like copies of IDs and everything, and then like I actually know this situation. Like I had a buddy who made like 60 grand assignment on a property, great and everything, right? Collected it, and then the real seller, like all this documentation was done, ended up calling them, being like, why do I not hold the deed to this property anymore? And like this is when title insurance kicks in, because like the buyer already paid.
Right.
Like that person got paid. It's not like the person who scammed everyone is gonna do this.
Title
Like,
fraud is on.
Well, let me ask you a
rise
question.
right
Like you as a mortgage loan officer, right? Like you guys have to verify as well, right? Who the
With
actual
the title?
owner is. Well, the title.
now.
Let's say the title clears.
That's out of my pay grade, bro.
Oh,
well, they do, but like if you submit, like,
I'm already trying to find
Right,
the next deal.
but like
I'm
if
trying
you
to help the next client.
yeah, like if you submit the deed and a copy of your ID and it's like all notarized, like, and you could fake this.
Right,
So this
right.
is kind of like what happened in this case. Like everything just got so faked. So actually, a buddy of mine caused like a huge alert in the New Jersey State MLS. We should have him here. Like a
my
fraud
God.
alert, he caused that, but he actually caught it, so that was really cool. And like he's the one who issued it, and like a whole bunch of realtors, like when they find out, that was like, they're like, that was you who did this.
Ask questions, and this is to say ask questions at the closing table, because again, deed fraud is definitely on the rise, where people are getting they're getting access to your emails, to your attorney's emails, and
Get
they're
title
saying,
insurance.
they're telling your attorney as the buyer, wire the down payment to this account because they've hacked their email,
yep.
and that money's gone.
I mean, I'll even
It's
tell you,
unfortunate.
like, there's like even fake title companies.
Right.
Oh, yeah, you got some good stories about this. Let's hear about this.
I mean, like, it's like, hey, wholesaler hits me up and like, hey, we're gonna open escrow at this title company. It's like, hey, potentially we might double close, right? I'm like, okay, the double close. I'm like, how much is the double closing, right? He's like, oh yeah, it's like, 500K, right? For example, I'm just using simple math.
They need your help.
Yeah,
Okay.
because he's making a big assignment, right? So I'm like, okay, give me the title company, give me all this, like, I need all the information. Who's the escrow officer? The email, website, everything lines up. You look them up on Google. It's kind of like it checks out, right? And then long story short is like, because it's such a big transaction, right? I always send, I probably hire like somebody on TaskRabbit or something. Like, hey, go to this title
What's that?
company.
Say it again.
TaskRabbit.
TaskRabbit?
It's
Okay.
like it's kind of like a
Uber for tasks. Like
yeah,
you just
so-
get random people who are available to do
I've
it.
heard of it. I didn't know
Yeah,
what it was.
yeah,
Okay.
Yeah.
Okay.
So I sent them over like, hey, just go boots on the
Verify
ground.
this
Yeah,
address for me.
yeah. Go to the address. Go check it out. Go to the office. Go talk to this person. There's no office. There's no. It's literally like it's
What?
like.
You just randomly said that, or was there something that seemed funny, or
No, I mean, it doesn't matter what kind of transaction. I always, if it's a big enough transaction, I always send it. Right?
okay, gotcha.
It doesn't matter because like it just too much fraud going on. I just
Okay.
can't trust anybody.
Okay.
Right. So I mean, for example, right, like the paperwork, email, website, everything was legit. If I were to send that double close, right, that money's gone.
There's no insurance for that.
There's no insurance for that. I mean,
No,
everything's
because the
fake.
title company is fake.
Yeah, they
Yeah,
control the whole.
so-
They control the whole deal, right? So like, if the title company's fake, there's no way around it. Like, there's no checks and balances.
There's no title insurance.
So
That's also
the
fake.
person got to the address,
Right.
And what did they?
He's like, I
what-
can't find
what
it.
information did they get?
No, he's like, I can't find it. I'm like, what do you mean you can't find it, right? And so like, I told him like, hey, that's the name of it. Go search it. It's some sort of office or whatever, right? And like, he's like, I got in. I asked, like, there's nothing. There's nothing. It's just an empty office, right? There's not even a sign.
Wow.
So there's a lot of this stuff going around. So you just, as private money lenders, we always actually have to be even more, have to do our due diligence a lot more than the normal people, because things happen. Yeah.
Gotcha.
Yeah. So what do you kind of like? What else do you kind of do? I mean, like you're clearly
That's my
getting
next
some
question.
stories of fake titles.
When we
companies.
first met,
Yeah.
I didn't. When you walked in, I didn't remember you, but
Right.
that meetup was like mind-boggling. Like the stuff I heard, all legit,
Right,
but
right.
just the creativeness that's out there of how to buy real estate.
Well, I mean, I'll give you an example, right? Because like since we're already talking about wholesalers and how we can help you, right? Because this whole podcast is about new wholesalers, right? Trying to like get
Not
their first
necessarily
deal.
new wholesalers, but like new people.
Oh yeah, new people.
Like new flippers too. So you could talk about
right,
what you help new flippers with.
So what I usually do is with everybody is like, hey, I work with you as a wholesaler, right? I'll be your second set of eyes. Let's JV, right? Make sure that you don't screw up and like make sure that you get the deal done at the closing table. And then since I private money lend to a lot of fix and flippers, right? I can help you dispo, right? Because I already have the cash buyers or whatever kind of buyers that you need, and depending on the market. Now, if you're a fix and flipper, right? What's your biggest problem?
Good deals.
Right. So,
any
deals. Just send me.
I mean, there's plenty of bad deals, like good deals.
God. Yeah. I mean, I wake up in the morning and like, my email, I'm like, no. Like,
when I first started working with Joey and I was, trying to be the next wholesale guru,
right.
Duru, sorry.
Right.
And I would call Joey and I'd say address and price, no pictures, no nothing. Not worth the job. I wouldn't do it. I could just be his head shaking through the phone. Right. I wouldn't do it, Joe. But bro, you haven't even seen it. Where'd you say it was? Yeah. How much?
Yeah.
Nah, it's not worth it.
I actually do that with my VAs too. Like they send me, I'm like, at this point, I'm like, send me the address, the person's name, number, what they want. I don't even care about like repairs at this point. I'm just like, just in case, like the name and number in case this checks out so I could call them and talk to them. But I'm like, basically, I just need the address and the price. And it's like, yeah, they're delusional.
I as a lender, I do the same thing. Like sometimes I'll meet someone and say, oh, I want to buy a house. Or I'll get a phone call. I get a referral.
Yeah.
And we start talking about how much. I'm already doing the math in my head. I can tell if you're
not
going
going
to
to
afford the property or not.
Yeah.
Yeah.
Yeah. So, I mean, I tell the wholesalers as well, like, hey, you don't want to be the wholesaler that constantly putting deals under contract and you bring it to the title company and you know that you're going to struggle selling the deal. And now you're going to piss off the title
because
company.
It's too skinny of a deal or.
Yeah. I mean, it's always a bad deal. It's not a good investor deal. Right.
It's funny you're saying title company because I remember when I first started, like I didn't really know what I was doing. Like I learned via trial and error, by the way, guys. Like a lot of trial and error and a lot of getting yelled at by buyers. But like I remember once, like I had this guy who yelled at me. Like he's a Dominican guy, born and raised in the Bronx, like lives there. Like I got yelled at a lot. Like you guys can imagine how like these conversations went. He was like, Vlada, oh my god, if you would have been like literally any other fucking person, like I would have blocked you right now and all this shit. And he goes into like why my deal is trash. I'm like. And like I'm actually just here taking some notes on this, but like now that I also look for my own deals, it's like I'm like if people send me like 2 or 3 bad deals in a row, I just block them. So like you also lose your buyers sending them bad deals at a certain point.
That's good.
So like it's funny you're bringing up the title companies because like I was like getting yelled at by buyers. Like I have buyers that were legit buyers that, like don't talk to me now. Well, I think now they're starting to talk to me, but it takes time to rebuild it, and it also takes time of like. Them seeing my deals again and be like, okay, so like now she learned what she's doing, right? And it's funny you bring up title companies, not the actual buyers, because it's like
everyone was born a rock star. I know coming from retail, you switch from same company, go from one store to another, but the systems are a little bit different. People do paperwork a little bit different, and they don't remember that you had a first day on the job as well.
Everybody starts somewhere,
right? Exactly.
Yeah, like the more experienced people are not going to take the time to yell at you. The one thing that like was great was like. We all started around the same time, and even like the guy Eric, like we all started around the same time. So it's like they're more inclined to tell you why it's bad because like they're still growing with you. But the more experienced people,
I'll tell you what. Like if you have questions, right? Like always hit me up. Like I'm always like I'm always open to kind of like go over the deal with you. Like why is it bad, right? Like I worked with a lot of wholesalers where they were brand new, and a year later they just took off, but they never forgot that I was there helping them, right? And so like they're always willing to do deals with me.
Gotcha.
Yeah. And so like you want to build that relationship, right, with somebody. So
do you do hard money lending as well, or
I don't do hard money lender. What I do is I come in on the gap funding.
Okay. Yeah. Can you explain that real quick?
Yeah.
So what gap funding works is hard money lender. If you're brand
pay attention, this is definitely we want to get you
right. This is important.
I mean, depending on who you're using a hard money lender, but anyways. If you're brand new, you're trying to do your first flip, whatever, right? You go to a hard money lender, and then you tell the hard money lender that you're brand new. They're most likely to tell you like, hey, we can buy your property, do the purchasing for you, but we're gonna probably purchase it at 75%, 80%, depending on your experience. And then they'll fund the 100% of the rehab, right? So rehab is like the construction cost, the crew, the labor, and all that stuff, right? Where I come in as the private money lender is I come in on the gap, right? The gap is the down payment that you're coming into the hard money lender. So if the hard money lender is telling you, hey, if you're trying to do this deal, you need to put down 25%. If you don't have the 25%, reach out to me. I'll look at the deal. If it makes sense, then I'll come in on the deposit for you, the 25% down. Yeah.
Well, you actually do you have a construction background? Do you have anything on that end, or are you more just a money person?
I'm because I done flips, so I know, but like I the way I kind of underwrite it is like they need to be under a certain ARV, right? Like, hey, where is this location, right? Like, is it in Camden or is it like in Paramus, right? It's like a big difference, right? Because if you're a private money lender, you come in and funding a deal in Camden, it's going to be very different compared to, somewhere in Bergen, right? So it's because you're taking on more risk, right? Because you're on second position lien.
And it's a smaller sample set of buyers in Paramus compared to someone and it's going to sit a little bit longer,
right? So my risk,
specific type of buyer,
exactly. So my risk, it will go much higher at that point, right? So I'm not going to take on those deals. I want to take on things that are, hey, you're in a town where somebody's going to buy the deal right away. So if you have flips like that, definitely reach out to me. I would love to work with you.
Okay. So the person should still have some sort of backer as far as the construction, like someone with experience.
No, not necessarily. What you do is like,
let's say this particular person is their first deal,
right? So what I always ask is like, hey, do you have bids, contractor bids, right? Give me 3 bids from contractors.
What? I should have that already before I come to you.
Yes. Wow. He wants your firstborn child to underwrite his deal.
I'm tough, but you know what? Through being tough, you learn a lot faster, and you do it the right way.
Yeah.
Right? If somebody's telling you to do things like are not based on how you're supposed to do it, it just takes one bad deal, you get wiped out.
You as the buyer, as the
private money
lender.
Well, as a lender or as the fix and flipper, right?
Gotcha.
Because you don't want to get foreclosed on your first deal.
These are like, if you're getting into wholesale, right? I don't know if you guys can agree with me. If you look them, like I saw one yesterday in East Orange, and 90% of the time when I go to PropStream and then I see the property details, see when it was purchased. It was purchased in a year or so ago. They're holding on to it because they're trying to find someone that's going to pay them double for it, some big corporation, a hedge fund. But then there are the ones that, like I saw one yesterday and I noted it down. It was purchased almost like 4 years ago. That person most likely ran out of money. Most
so
cases.
It wasn't finished.
No, it wasn't. It was started.
That's
one of the first deals I ever got under contract, and this has actually happened to me since, and this is like when I pitched Novation, maybe for another time, but like for us to go into that. But you'd be surprised how often people actually run out of money like doing flips, like especially if it's their first flip. Like they don't do their due diligence, they don't get experienced contractors. They might just go with the cheapest bid without necessarily vetting the contractor. I had a guy, like the repairs probably should have cost 30, maybe 40 grand. Somehow it was like a family member that he just trusted, and the guy ended up like going super over budget, like 85 grand. The guy, like the flipper, maxed out his credit cards and everything. Wow. It was a bad situation. So it's kind of like, as much as it sounds harsh, like he wants 3 bids, like what he's asking for essentially is not like 3 bids, like, oh my God, because we're going to go with the cheapest price. He just wants to see that like it's about the same cost. Like everyone's just about in the same thing. Like if it's like a few grand off, like it's a few grand off, but
obviously you're going to have people that are going to charge a little bit more. Some people are going to charge the cheapest, but I want to have a range of like knowing what I'm getting myself into.
Yeah. It's not like he's trying to like be like, it's just to avoid a situation of like, hey, your repair should be 30, 40 grand instead of like 85 out of nowhere.
I mean, there are situations where, I heard about it, right? I never experienced it, where people submitted 3 bids from like 3 different people that they know of, right? It's kind of like they're kind of like in the same group, and like almost like essentially like almost committing fraud, right? Like, hey, like trying to get money from private money lenders or hard money lenders. Like this stuff happens, so you always have to be on your toes as a private money lender. You question everything, and
it's also not a bad idea to walk sometimes.
Oh, I walk away from 99% of the stuff that comes through me. Wow. I'm very selective, right? But if I choose to work with you and like, we can have like a long-term relationship, I go with you like all the way.
That's also how you know you have a very good deal.
Yeah.
Because not only have you gotten basically, you know, a blessing from the hard money lender, right?
Right.
You've also gotten this gentleman's blessing,
right?
That's also experienced.
And also, like, what's funny is
you get twice the admission for one ticket.
Yeah. You know what's funny? Like I work with a lot of contractors. I don't know if there's contractors in this podcast, right?
We got one that actually sits right next to me usually.
Oh yeah, nice. Okay, nice. But like I have this conversation with contractors all the time. Like, hey, you know, you're doing all this work for the investors. The investors are doing, you know, making all this money. Like, why don't you just get into your, you know, get into flipping yourself? Right. What's the question?
Because of the black curtain. Because they don't know. No,
the black hole. They don't know.
I learned that from. I remember the Diary of the CEO. I got that. He was interviewing Cody Sanchez, and they were bringing that up. Right. Like why people don't get started in certain industries, certain business, because of the black curtain effect. Yeah, the knowledge. They don't know.
Where do you get the money from?
Where do I get started?
Right. So what I've been doing is like I'm having conversations with a lot of contractors. Be like, hey, this is how the investors are doing. Right. They don't use their own money. They use a hard money lender. They use a private money lender. They use somebody like me, right, in order to get the deals done, and that's how you guys get paid.
Right. You think that like, you know, it's something deep in my heart right now that's irking the hell out of me. Yeah. Like Jeff Bezos has this. He's buying single family houses all over the country. Yeah. He's got one of those fractional type of deals where you can invest in it. You think Jeff Bezos is going to the closing table whipping out the black card? No. Absolutely not. I can't make it to this closing. Can I say
No, it's not happening. Yeah. So, you know, part of this, like, you know, me as a private money lender, I also want to teach a lot of people how to, you know, investors doing these deals, right? So it's not even just contractors. Like I come across a lot of like real estate agents that call me all the time. Like, hey, and I tell them like, hey, why don't you just take down this deal yourself? They're like, oh, I don't have the money. I'm like, okay, money's not the issue. You just don't have the knowledge, right? So let me just show you how.
Do they admit that?
No, the number one concern is always like, I don't have the money to do the deal. I'm like, this is how you do a deal with other people's money, OPM, right?
Right, exactly.
So if you're in real estate, you have to learn how to use OPM, or else like you're gonna get stuck. I mean, even if you're doing burrs, like, you know, hit up, you know, Joe for like, you know, whatever refi you got to do, you have to learn how to actually have all these tools in your tool belt. Right. Yeah. But like the number one concern is like, I don't have the money to do it. So let me show you how.
Same goes on. Right now, we have a great down payment assistance. That's a shameless plug. Down payment assistance program in New Jersey, $22,000.
Wow.
First generation home buyer, $22,000 you can get.
For anybody. So like
as long as you're a first time, that means your parents can have owned a home.
Okay.
And if your parents actually were homeowners, you could still get up to $15,000, depending on your county.
Wow. Okay. That's nice. That's nice.
Not bad. So there are options. I say that to say there are options out there.
You know what it is? Like when I first started real estate, like I didn't have all the knowledge, right, that I have right now. But also back then there weren't so many educational, I guess, podcasts and all that. They were just bigger pockets. Yeah, there was all gurus, right? Obviously, but like nobody's doing deals. But you know, you want to know how to, you know, you want to be with somebody who's actually going to teach you this stuff, right? So connect with, you know, find somebody that, you know, you connect with, right? You know, somebody who's gonna, you know, walk you through it, and just JV always. Okay. If you're gonna make less, it's okay. At least you're paying, you know, you're kind of paying for the education.
At least you're not losing money.
Yeah, true. well, the lenders are never gonna let you lose money.
There's a great Sopranos. I can't mention it on this podcast.
Well, like the lenders
his Soprano-ism, his Tony Soprano, where, you know, you go down the hill slow, and you get them all. Instead of racing down. I'm paraphrasing it. It's right. It's a little too explicit for this podcast. But, you know, it's what he was explaining to, I think, his son, or I forgot exactly what he was saying. Go down the hill slow. Right. You don't just try to race down and grab everything.
Right. 1,000%.
You're gonna fail. You're gonna fail.
And don't try to take down everything. Like, not like, sometimes it's okay to walk away.
Yeah. It's like I try to do that Louisiana deal myself, and I'm like, I'm sick. I'm in Berlin. Like that's partially why the arrears like stuck up, because like I even had like someone else who was like so ready to fund my deal, and like he was like pretty much talking me into it. I'm like, dude, I'm going to Germany in like a week. Like I can't coordinate this. Like how am I, like it's very hard to project manage it from far away. Like it's like a market I have to like totally put everything together on, and it's like.
Well, luckily we got connected with a really good agent down there, so.
We. Oh yeah, we. Shameless plug, right?
She's been talking about this deal endlessly.
Oh, because like I then it's like I wanted it for me to start. So I actually started doing the work for it. And then I'm like, this is a lot of work.
Are you still listing it or?
Well, it's gonna be like a micro flip almost, right? So we're gonna, use a creative. We're gonna take it over creative. Basically bring a contractor, fix it up a little bit, put it back on the market.
Oh, so you're doing this now too?
Okay. Well,
he's also been on the fence of doing it himself.
So sort of like a novation, almost like a novation.
Yeah, but
But you are taking over the payments,
we are
stop bleeding
on
on the arrears.
Yeah. So we are closing on the property, versus the novation. And then I guess us as the new owner, we're gonna list it on the property, and then we're gonna offer seller financing on it. But that's a whole. I don't want to get too.
Yeah,
Yeah.
we're out of time.
We're running out of time.
We'll have you back
Next time.
Okay, so Daniel, how can people get in contact with you?
Well, you can reach out to me on my Instagram. It's DTHE.Daniel and then Wang, WANG. Hit me up, DM me. Any questions you have, fix and flippers, agents, wholesalers. I work with everybody. I'm well connected. If you need money, private money, hard money, whatever you need, hit me up.
Awesome. If Vlada, how can I get in contact with you?
You guys could hit me up on Insta. It's vlada.a.kobileva. We'll put it up on the thing.
We'll put it in the notes.
And Joe, how can people get in touch with
Joe
you?
does mortgages. I can be reached at 212-380-6863. Whether you're looking to buy your first property for your family or you're looking to do some sort of DSCR, profits and loss, any investment type of deal where you can basically burr out of what these guys can help you with, I'll be on the last leg of the deal for you.
Shameless plug here, like buy the deal from me, get him to fund the gap, and get him
How
to
much
fund
more
the deal.
experience could you ask for?
We're giving you. There's no
giving you, like, the
excuse not to close
entire
the deal. There's no
Exactly.
excuse.
I like that. I'm glad you brought that up.
Yeah.
There's like no excuse, no.
All right, guys. So thank you very much, Dan. You were Dan the man today. You provided some great content.
Thanks
and
so
if you guys would like to see more content like this, please remember to see us every Tuesday, 1 o'clock, Facebook, YouTube. And thank you so much.
Hit that subscribe button.
Yeah, please. Oh, yeah. Like, share, and subscribe. Please. Thank you.
We never say this.
Yeah, I know. Every week when I get in the phone, I forgot to say that. Please like, share, and subscribe. And if there's any other things that you'd like for us to discuss related to real estate, put it in the comments. We're always checking it. And awesome. Thank you, guys. Appreciate it. This was awesome.
Thank you.
Take care. Bye-bye.
Bye. Don't drop another lamp.